Hello, hello and welcome. Hello and welcome back. So this is a very simple way of trading crash 1000 using engulfing candles and RSI. Now, the first thing you want to do is go to the 1 hour time frame and mark out engulfing candles that are bearish engulfing candles. Okay, so once a bearish engulfing candle forms, you want to use your you want to use this to predict where you place your stop loss and take profit is so I usually target 1 to 2 risk to reward ratio, like that. So this is the first step. Once you've done this, you will not place a trade at this point. You will not trade. You can do that, but if this you can't do that if you have a big account or a reasonable amount of money you're trading with. But if you're trying to grow a small account, you will not trade this. Instead, you will go to the 5-minute time frame, and then you will check this. You want to see what is happening here. Okay, now we have this red zone and this green zone. Okay, so assuming you've just marked our bearish engulfing candle in the higher time frame and the price is currently here, you want to enable your RSI. So this RSI is not this the same settings that you use. These are the settings. Input is length is RSI 3, and then we have the levels at 5 and 95. So extreme oversold and overbought levels. That is what you want to use. Anything else, it doesn't really matter. Those are the two things that are important: length of 3 or RSI period of 3, and oversold and overbought zones of 95 and 5. At this point, now you want to come to the 5-minute time frame after marking this tool here, and you want to take all the trades that will give you an RSI oversold zone, like at this point here. Once it is in the oversold zone, you want to enter that trade. Now this is very good for people who are trying to grow small accounts. For example, you have your $50 account or $100 account. Now also this is good because it enables you to stack positions until the trade moves in your direction. Now if you're trading small accounts, you are only selling, you are catching spikes, these spikes or downward movements only. Now what are you going to do? Every time the RSI comes to this level, you want to take a sell. Okay, for example, this point here, the RSI is in the oversold zone, you want to take a sell. So you take a sell there, you take a few dollars and you're off the markets. The next time RSI comes to this point, you want to take another sell. Now at this point, you'll notice it continuously moved up. So you will take your first sell at this point, back at this point, and then your second sell at this point, and then your third sell at this point, and then you'll wait for price to move lower until you recover the losses you have made at this point. Now this enables you to stack positions and wait until the price moves in your favor. Once you're satisfied with the profits, you can close the trades and take the next one. For example, here we had another position, a sell position here. This is an opportunity to catch these spikes. You take that, let me lock this. You take that, what has happened? So you take this, why is it this one right here, until you are satisfied with the profits you've made. Now once this price gets out of this green zone, you can stop taking those trades because maybe price will start reversing. Now, how do you manage your losses? Now, if you've taken an entry here and price moves higher without spiking, once it gets out of this red zone moving up, you can close your trades, and that counts as a bad day for you. Now, let us look at other examples. Let me go back to the 1 hour time frame. You look at other examples. You can try and minimize this and do this. So we have this was a successful one. Before I go to the next example, I want to highlight something else. Apart from using the 5-minute time frame, you can also use the 15-minute time frame. Let's look at this example here in the 15-minute time frame. The 15-minute time frame, still using the same RSI settings, you will still be presented with similar opportunities, but this time there will be less opportunities because the 15-minute time frame is a bit longer. Now, at this point, you can see there, price got into what has happened. Let me try and get it back. Okay, the RSI is deleted. Let me just return it. Change the settings back to inputs period of 3 or length of 3, and then style. We will not use the middle point, we will not use the moving average, we'll just use this 95 and 5. Okay, so looking at the 15-minute time frame, you can see at this point you would have entered your first trade, and then as price keeps going higher, maybe you can grid these positions up to 3 positions, maybe the first one around this point, the second one around this point, and the third one maybe here, and then you wait until price moves lower to give you profits, or even your first position to be break even. Or you can still hold this trade until price moves out of this green zone. So that is the second way you can trade this using the 15-minute time frame. Now we're going to look at other examples. Let's check out other examples. We want a bearish engulfing candle. This one was not bearish engulfing. You can see this one here. Let me try and use the mouse. This one here was a bearish engulfing candle. You mark that with this tool, and then stop loss right above that bearish engulfing candle, and then you want a risk to reward ratio of 1 to 2. Okay, and then you go to the 5-minute time frame. Let's see where it is. So this was our first one, this was a second one, we have it here. This moved quite fast. You might have missed out on several opportunities in this move. So you can enter the first trade right after the close of that candle, of the bearish candle, and then in the lower time frame, as price moves, you want to re-enter, or maybe you want to take several other positions. For example, once price gets to level 95 or the overbought zone, you want to enter a trade. Another one example here, at this point you entered another trade, and then you held these positions until you got out of this green zone. Okay, alternatively, you can be picking a single position like this. Once you are satisfied with the profits, you leave, and then you pick another one again. Once you're satisfied with the profits, you leave. That is how you will grow your small accounts to bigger amounts. Okay, using the 15-minute time frame, I don't think this presented a good opportunity in the 15-minute time frame. There was no opportunity in the 15-minute time frame, unless you take this was in the 90 oversold zone. You take this and then you hold for a bit. Getting to another example, maybe I'll take 2 more examples and then we call it a day. So another bearish scenario, this was not a bearish engulfing candle. We can look at this one here. You put your tool there, right there, target 1 to 2 right there, and then you can go to the lower time frame, the 5-minute time frame, and see what happens. Now immediately the bearish engulfing candle has closed. Let me try and get to that exact spot. Immediately the bearish engulfing candle has closed. What you want to do is to enter your first position immediately after that close, right there. Okay, and then you want to take other opportunities. For example, this one here, you take this and then you take this as well. So these are 3 positions that will grow your account, and then you take profits at once you're satisfied with them. Now if this price is still playing inside this here, you can still take several other opportunities. For example, this one, and then you come here and stack positions until you get your money back. And then once price completely closes out of this green zone, you can exit or you can stop trading at that point. I think also this one presented an opportunity in the 15-minute time frame. Let's get there. Yeah, we have an opportunity in the 15-minute time frame. The first one was this one. You take this, you hold until, okay, the first position you can take is immediately the engulfing candle closes, and then the next position is here. You take this. What just happened? Yeah, you take this and you hold that position, or you take another one here and then you stack the positions until you get here. Now with this simple approach to trading Crash 1000, you can easily grow your small accounts to higher amounts, and then even as you grow the account, you can keep stacking positions until if the price is not moving in your favor, immediately you will still get several other opportunities to trade and recover those losses. As long as you are grading, you are using the grading method to trade. You can see another opportunity happened here. 1 to 2 right there. Let's try and get another one. This was not engulfing, this was engulfing. Now, and a situation whereby you get to close a trade in a loss, maybe this can be an example right here. Okay, so you entered a position, maybe we took a few other in the 5-minute time frame, but as once price closed above this red zone, you close those trades. That will be an unfortunate day for you, but that happens. It is not all the time you will get profitable or profits. So another prime opportunity was here. You can see that happened. You can see, let's check this if it was a good one. This was not a good one. So you entered a sell here and then a few other positions. That's why it is important, as you take those 5-minute positions, once you're satisfied with the profits, you take them even if price is still in this green zone. But once it's outside of this red zone on the upside, you close that trade. Another beautiful opportunity existed here. You can see that. So you can use this, try it, you can backtest it. I have seen it works on Crash 1000, and also use the Crash 1000 because the value per pip on Crash 1000 is low. That means you can easily trade small accounts and grow them. Try and backtest this first, or test it on a demo first and then see how it goes. All the best and bye bye.